There's been a lot of emphasis on day trading. I love day trading. Day trading has worked so well since June of 2022, staying short term within the uncertainty of whatever the Federal Reserve is going to do with rates. How far are they going to take them? And then when are they going to start to cut them? But there are some important levels that are being broken as we are in the early stages of the new year, this first half of January. One of the levels that it's really interesting is we're finally getting above, and this is the S&P that I'm looking at, daily time frame of the S&P, we're getting above the 200 exponential. That's the equator, gang. That's the line in the sand. Getting above that is generally going to be the bullish hemisphere. To close above that and continue to use that level as support will be technically a very powerful level to have broken. The NASDAQ is still well below that, which means we've got to exercise a lot of caution about the S&P making its way above it. What remains the strongest index? Gang, it remains the Dow, which is not in an uptrend yet, but it's been above the 200 for a very long time. It's been above the 200 since the beginning of November. This is where your relative performance is. And while the Dow's strength will help the S&P, the NAS being quite the ugly laggard is going to be an issue. Am I bearish on equities? Not even close. If March or May of this year is when the peak, that target rate probability is reached, if that's where the Federal Reserve does peak, nobody knows what's going to happen next in terms of rates, except for Jerome Powell. And he's not really going to tell us. He's only going to use the data to justify his next messaging and the FOMC's next decision on rates. But with what we know now, based on the data and the Fed Fund futures, rate hikes are going to end March or May. Rate cuts could begin as early as November or December of this year. That's where I look at what's going on with the broader averages. Now, there's a couple things that I'm going to look at to also confirm that, and that takes us over to the euro, and that takes us over to gold, and that takes us over to bonds. Euro moving higher is the dollar moving lower, period. Euro's been in an uptrend since mid-November. Gang, that's very bearish for US dollar, which bearish dollar is great for equities. It also suggests what? Central banks that are still hiking, and in maybe the early or middle part of their hiking cycle, are going to see the acceleration upward of the currency. That's what's happening with the ECB, the European Central Bank, and the euro right now. The dollar is weak because we're on the tail end, meaning the U.S. central bank's on the tail end of the rate hiking. Strong euro, bottom line, strong euro is weak dollar. What's not to like about a weak dollar? Well, what's not to like about lower yields? Gang, it may not be a pretty chart, and it still may not be above the equator, which is sitting still above it. I know, it's still pretty ominous. But for the most part, yields are going down as overall we're seeing kind of an ugly stair-stepping, maybe higher through to 200 in the ZB futures. I won't call ZB bullish, but considering that we are neutral right now with a bullish trend that preceded it, I can't be bearish. We might see overbought, oversold. This is true, but my emphasis is going to be on the long side. We are not seeing higher yields any longer, gang, in bonds. Bonds love to front run where yields are going by 6 to 8 months. They love to front run. They love to play a game of chicken with the Federal Reserve. So people can talk a lot about what this move in bonds means, but let's just take it at the most basic meaning of it. Yields are going down. Now, people can argue about what that means, but yields are going down. That's all that I want to do. I don't want to read into it. I see tweets all the time saying, the bonds are saying something. Yeah, they're saying that yields are going down. Anything else is my personal extrapolation. The market does not care what Raghee thinks. It's going to do whatever is happening next in terms of the messaging from the Federal Reserve, which is the only macro that matters, to be quite frank. Right? Let's take a look at gold, because gold is an interesting look at real yield, which is the nominal yield of a bond minus the rate of inflation. Gold moving higher is really that real yield flattening out or moving lower. This is good, gang. If I'm measuring two important things, yields and inflation, that narrowing chasm, flattening out or moving lower, gold moving higher, hard for me to see this as not bullish for equities. Gang, if you've been following what I've been talking about for any length of time, I've been bullish since July of 2022 because of volume. Now, volume and macro, take the recession conversation out of it, gang. Volume and macro is definitely what is moving the market right now. By the way, Rog, do we sell off with recession? Here's what I know about anything we talk about. If you and I are talking about recession, to some degree, it's priced in. Recession is not what moves a market lower. It's shocks. It's surprises, right? Sell-offs never happen when we're talking about them. Sell-offs happen when something comes around the corner that we didn't see. So our job is to think about what's the dark at the top of the stairs. Yes, but let's not ignore the good things that are still visible, right? Let's not ignore there are quote-unquote good things out there. The Federal Reserve, at the end of their tightening cycle, if we do go into a recession, late Q2, Q3, we are arguably less than a quarter away then from the Federal Reserve, who's already messaging via the Fed Fund futures that we could see a rate cut. So it's hard for me to panic over things that we really can't, we can't predict these things. Trade what we see, we're going to be okay. This is what I see. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.